Hello, I'm Mike Turner, and today is October 9th, 2022, and I am doing a market update, a market analysis of the Boise real estate market. And the reason why I'm doing this is because there's a lot of misinformation out there, a lot of headlines saying a lot of different things about the Boise market, and some of them are just misguided a bit. And I think that comes from not having a full understanding of everything that's happening. But my goal today with this video is to just to inform you, right? Not to, so you can make better decisions about better real estate decisions going forward here in this market. Whether you're buying or selling or just watching or renting or whatever your situation is, this video I hope will shed some light about where we're at and where we're going. And I this video takes me a little while to do. It probably will last a little while because I have to kind of walk through step by step where we're at so that you can see, like when I can just make predictions of where we're going, but unless they're kind of explained based on actual real data, um, you know, h- why believe it? Okay, sure. So let's just jump in. If you don't know who I am, I've been in this real estate market here in Boise for the last 20 years, and I study it very closely, and I've seen some things that I think are worth noting that I don't hear out anybody else talking about. So let's just talk about them and inform me what's going on. Okay, all right. So first up, when I was in college, I took an economics class, right? And you learn about supply and demand and how it impacts price, right? So simple economics, if the supply goes really up, too high, the prices fall because there's not as much competition for them, and as supply goes down, we have it's a lot more heated competition, therefore price goes up. Simple, right? Okay. And right now we're experiencing very weak demand, especially for the time of year. The whole summer here in Boise was fairly weak compared to what we've been used to the last number of years. And of course, this has been caused by our high prices, but mostly the high interest rates that got pressed upon us starting this spring, to 2022. Okay. And and this has led to a rapid change in the cost of real estate in the Boise market. Now, most markets, all markets, right? But very significantly in the Boise market because our home prices shot up so significantly over the last 2 years that when interest rates also shot up here in the last 6 months, that it just was a double whammy, and therefore our basically the cost of our real estate doubled. Okay, so I'm going to kind of walk people through that so we can see. The better we understand the impact, the better we can kind of predict what's going to happen next, because we can kind of see things happen in more real time. Okay, so like this chart. This chart's pretty helpful. Get my face out of the way here. All right, um, so this chart shows the demand, right? So demand going back all the way to 1999. When I say demand, is total homes sold for the year. Okay, so this is Ada County. This is the market that Boise is in. Basically primarily, and the county it's in. And by the way, these charts that I'm using, they're from a paid subscription service. It's called Web Charts. Jerry Webb puts them out. They're really good. It's like 50 charts per county, Ada and County, and they're very good. So if you don't have it, if you're a professional, whether you're a realtor or investor or something like that, I highly recommend these charts. Okay, so I'm just showing you a little snippet of some of them, and then I have my own comments on them. Okay, all right. So this chart showing like, okay, like back in 1999, the demand was slowly growing, our population was growing, this all like normal, healthy, and then wham, it gets super attractive, super heated. Um, Anybody can get a loan. People bought stuff, bought investment properties. It was good times, right? And then you can see how the market demand peaked in 2005, and then this is 2006, 2007, 2008, bottomed out in 2008. So this '06, '07, '08 demand is just like going down, down, down. And and so most people think of like, oh, the market crashed in 2008. And like, no, it had been going down for a while. It just was more evident to the whole world when the stock market crashed, basically in fall of 2008. Okay. So I'm pointing this out because we see something over here, right? The same kind of sudden drop in demand. And it's not nearly as severe as these ones, but it's significant. Excuse me. And this one here is in orange or red, whatever, because the year isn't over yet. This is 2022. The previous one was 2021, and the year isn't over. So I'm just projecting. I think this is kind of probably best case scenario of how many homes will sell in the Boise market by the end of the year. This number could be 8,000 or 8,500 as well, right? It could be less. But I just want to give you an idea of we've dropped down to levels that we hadn't seen, since like 2014, 15. Okay. And but the sudden drop is important because it's really kind of correlated with this chart. This is interest rates, okay, over time from 2005 through today is the Freddie Mac 30-year fixed rate mortgage interest rate. So they take an average for the month, what it was, and and then we chart it out. And it's a little bit hard to read because I put these overlays on it so we can kind of see this color area. And these are kind of important, all right, in the sense to kind of illustrate things. So you see how there's like this peak up here, it says 6.76. So there's like this peak here, and we're here and right here. These are basically like, uh, this is 2006, 2007, 2008. This is what they correlate with, okay? And that's worth noting because you can look at this, go back to this chart and see, okay, 2006, 2007, 2008. You see that? Okay, so you can see the direct cause and effect of when interest rates get pushed up on purpose to slow the economy down, okay? It works in the real estate market because it's like a big old wet blanket. It's put on the market because all of a sudden the cost of ownership goes way up, right? For getting a loan. And and then it's just dropping, okay, and I call this kind of yellow area kind of recovery, okay, and then this green is kind of boom time. So you can see like this is the lowest where it got. It dropped in like 2012 and then dropped down even low again in 2016 and 2020, okay? So 2012, 2016, 2020, it really drops down. In fact, it's way down for a long time here, right? So then we kind of go down here because you can really say it really went from 2019 on to 2021, right? So when you go back to this chart, you can see like, okay, face out of the way here. 2012, okay, is when we start seeing this jump to this jump, okay? And then 2016, look at this. This jump to this jump right here. All right. You see how this fuels the market, like fuels demand. Like, yes, low interest rates, bam, more people buying. And we just keep it here, right? We keep it low, keep the markets running red hot. The real estate market is red hot. Okay. And then 2020 hits because it drops even to that lowest point. Like people are getting like low twos on their 30-year mortgage. It was crazy. Awesome if you got one on one of those loans, right? So that just pushed it up to these like crazy levels. And now they're like, oh crap, we gotta slow this thing down. So they start creeping up interest rates, and then they really dropped them recently, right? Which is really having a direct and immediate impact. So going back to this chart, you can see, yes. So, and in a very short period of time, we went from 3.1 or even 2.68% all the way to, over 6%. Okay. And it was a very sudden rise. Okay. Like it's not normally this fast. They don't normally rise it this fast. It's like they waited too long and they should have done it years ago, but finally they do it and now they're just playing catch up, right? So it's rocking the market. And so this rapid increase is causing this. So you see January 2021, the median sale price was 440, 1,000. It looks like the last zero got cut off here. Anyway, so the interest rate was 2.74 in January 2021, the average anyways, and that gives you a mortgage about 1,600 and some change, okay? And that's informative because over here in May 2022, the median price was peaked out. This is the highest median price on record for the Boise area, which is 590. and interest rates were 5.5% at that time. Of course, they're higher now, and they've been higher than that. But you can see in that all of a sudden we're going along, and then wham, the high interest rates. Because if the interest rate was still at 3% or something like that, the real estate market would still be going up. Okay, it'd still be getting higher and higher and fueled. Okay, and well, that's great for homeowners. Eventually, that it can get itself into a situation where getting very unhealthy because no one can afford housing. Okay, and these and some economies around the world have not fixed this, and then they end up having like 50-year mortgages and whatever. They keep changing it so get this payment more lower. Okay, but they have interest rates up. It's working, and the cost of home ownership in Boise has basically doubled in a very short period of time. Okay. So again, it causes this little cause and effect. So this is still demand. Okay, this chart's showing you just from this year compared to last year, right? The yellow is 2021, the blue is 2022, and it's showing this over year percent change. So as of September 2022, the demand, the home sales for Ada County are down about 15%. I believe the year it'll be down near 20% before the year's over because we're just going to trickle our way through the rest of this year with not very many home sales. But I don't predict it's going to keep dropping like it did in 2008 to the same level. All right, and there are some reasons why. Okay, I believe that. Okay, or predict that, and that's because one main monster difference. Okay, and that is really illustrated well with this chart. Okay, so this chart is actually from Boise Regional Realtors. Get my face out of the way here. So basically, what we're looking at here, it's hard to read. I will illustrate a little bit that this gray line is going up and down. That is the total supply, right? We're talking about supply now, right? And supply, and then this green line is illustrating price, median sales price throughout the valley. It goes back to 2004 all the way through today. Okay. And you can see that based on their chart, that the the supply was really super high back in from 2005 through 2010, 2011. Okay, I put this line here, and this line's significant for a reason. Okay, so basically this lines up with about 3,000 homes on the market supply. Okay, and in 2005, this is when it first shoots up over 3,000. But then it comes, we had a really, good sales summer on there, and it shot it back down. Okay, but then the supply went back up. Demand was dropping. Remember, show you here, demands. This is again, this is 2005. We had tons of sales, but then 2006 we got less because interest rates are high. Interest rates are high. Interest rates are high. Okay, and it just stacks up the supply to very high levels. We went up, near 5,000, and so in fact, yeah, even over 5,000 homes available supply. So it was a lot. In fact, we haven't seen us get anywhere close to that since. Okay, and so but what's interesting is that we had like this surplus of homes over 3,000, and we're up there for a long time. But as soon as it came down below that mark, it's about right here where this dotted line comes down, and that's basically 2011. And what do you notice about this green line starting in 2011? Well, it starts to go up, right? And the lower the supply goes, the more severe this line goes up, the more significant how quickly the line goes up. It turns it so we got to this point, and you saw all this line's kind of going at a healthy rate, and all of a sudden the supply drops super low, and this thing just starts skyrocketing. It's like this is when our home prices went from like 300,000 to like high 500s in a very short time, like just shot up like a rocket because this was so low. Okay, right? Now, so this is directly correlated. So even now we've come up like our inventory's back up here, to about 2,400 homes, 2,500 homes. So that's significant, but it's not up where we were before. Okay, and this is as an impact on things. Okay, so. But yeah, so this is our supply is not where it was, and we're not quite in trouble like we were before. It's not to say we may not go there, But there's some reasons why I think we may not go there this time, or at least anywhere it's this bad. Okay, there's lots of reasons. So let's talk about it. Because the supply, let's again is this chart is just shows supply or inventory. Okay, and this chart shows you. I'll explain a few things. There's a lot going on here, but this bottom yellow line, this is 2021. Okay, this blue line with the triangles coming up here, that is 2022. So we can see April. This when they started really jacking up the um, interest rates, over April, May, and June, and all summer long, right? So boom, 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 they're raising rates. So demand is diminishing, 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 and then it didn't, it wasn't really clear how high this was going to go, but it was kind of encouraging to see it start to do this. You see how it's starting to level out, where there is still some home sales, but not everyone's panicking and putting their home on the market like they did back there in the last bubble. Okay, why? Well, there's a few reasons why. One is a lot of people have a rate of like 3% or less mortgage on their property. Um, they don't are not in any hurry to let that go. Okay, because if you have to go out and buy something else, even if you can sell now and do really well on your house, if you're not paying cash for the next one, you're walking into a pretty high interest rate. So that's keeping some people where they're at from listing their house. Okay. The other reason is back in like '07 to 2006, 2007, a lot of people had crappy loans, really crappy loans at already high rates. Okay, they didn't have low rates back then, like we did, some people had in the last few years. And so, and then some of them were adjustable. Sometimes some of them are 5-year one arms and all these like junk loans. And a lot of people had loans who shouldn't have loans, right? They were just giving them away like candy. Okay. Um, and so there was a lot of speculative buying, a lot of people buying out of state, rentals, like our whole valley is full of people who bought homes here from all over, the United States. And when the market started tanking and they couldn't sell them and they were upside down on them, they just started walking away from them. And even people who lived in their house, okay, were so upside down on it, their interest rates, that there was no sign that was ever going to come back. The real estate market was going to come back anytime soon, and therefore they're like, well, we just might as well just walk out of here. And there was so much cheap housing, cheap rental options at the time because there was just this oversupply of housing at the time that it was just made more financial sense to just move on. And that's what happened. Today, the rental market is still crazy high. Like that's the bailout of your house right now is not a great plan, okay? Because it's likely you might pay more than what you have or paying in a mortgage. So it's just different circumstances. So now more people who have loans and bought recently had to qualify and even put some money down in some cases, to buy them. So they're likely in a much better situation. Okay. So this is all really important because I think this is going to help this from pushing up to these high levels because this level, this line right here is 2006. Okay, this is 2006. You can see we were in a very healthy area down here, and then the inventory just went up, 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 and it stayed up because the yellow is 2007 and the red is 2008. And if this showed 2009 and 2010, you'd see like the inventory starting to come back down and come back down until we get all the way to 2012 when we drop back down below this 3,000 homes mark. Okay. And this is just a rough estimate of where I believe the market really starts to shift into definitely more of a seller's market. Okay. I mean, sorry, a buyer's market. And because there's just so many homes on the market at that point where uh, sellers are really having to compete with each other to get their home sold. I mean, it just means, okay, well, it's not selling. I got to drop it. I got to drop it. I got to drop it, and it just kind of pushes the market down. And the higher that go, the worse it gets. Okay, right? So if you're just barely over 3,000, maybe it's a slight impact. But if you're up, way up, and you stay up there for a long time, you have what we had before. And this is what needs to happen again for people to expect home prices to really come down significantly. And that's one of my main points I want to cover. Like, there's a lot of chatter about how this market is like so overvalued, and that, they can't wait till the median home price comes down to 250,000. And that's just not going to happen, okay? Unless we saw something like this. Okay. All right. And even if we did see something like this, because the 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 makeup of who owns property is different now than it was in 2006, 7, and 8. I just, I still don't think that it would be as nearly as severe if that happened. Okay. Um, so let's put this in another perspective. Let's show you this chart right here. Okay. So this one is a correlation of both supply and demand. Okay, so supply and demand. So this what this chart is showing you is the selling odds, which is basically a calculation of how much homes are on the market divided by how much homes are selling in any given month. Okay, so if there was 1,000 homes on the market and you know uh, 200 homes sold that month, then it'd be like 5 months of inventory. Okay. But if 500 homes sold, it would just be, 2 months of inventory sold. And if 1,000 homes are sold, it'd basically be no inventory. Okay. Right. You get it. Or 1 month. Okay. It would be 1 month. And so this chart, it's a little hard to read, but I'm going to point it out to you. It goes back from 2005 to today. And you see this, I have this kind of overlay of this green area, the yellow, of course, this is the boom. And then when in here, it's the kind of recovery. I'm going to talk more about that in a second. And then bust. And 2005, the summer of 2005, it's awesome sales. We sell a ton of homes in the Boise area market, and it drives our inventory down super low, super low. And home prices went up super fast. Okay. And then interest rates started coming up, and that just slows things down. But they were still building a lot back then, and there's still a lot of people who are like, oh, I need to get my house sold, and I just need to get my property sold. I'm kind of seeing the winds change in real estate, and therefore everyone starts putting their house on the market. So it's just a double whammy, right? Builders are still building like crazy because they have all these developments in progress, and people are like, whoa, I got to get my house sold. Okay, so it just pushes us up into these crazy levels. Okay, so we go up into like, past 6 months of inventory, and it peaks out at like 16 months of inventory. Super awful. Um, and so this is the whole time we were just like the market's getting rocked, prices keep coming down, 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 down. And so and it wasn't until about 2011 when supply comes down, and so did interest rates a bit, to the point where we start seeing us drop below kind of this 6 months of inventory, and it stays like in this 3 or 4 months of inventory for a while, and then till about 2016. Remember, that's when they shot down the interest rates again, and it pushed us down. It is even lower levels, like below 2 months of inventory. Okay, and then they dropped interest rates even further around 2020, right? Because COVID, and it just pushes us basically down to like no inventory. It was insane. It was just like seemed like there was 5 homes for sale in the whole county. It was ridiculous. And so everyone's fighting over them, and it got really intense, right? Which just totally pushed up our home pricing very quickly. And then eventually they're like, okay, we got to slow things down. So about spring of 2022, right here where this black line is, they start raising interest rates, and therefore our supply comes up, demand drops, and our months of inventory is coming up. Okay, right now we're about 3.3 months. So let's take all this into consideration. Okay, so one thing you'll see right now is this doesn't look like this. Okay, at least not yet, right? And it's important to know that our home prices are falling right now. I'll do that next chart. I'll show you home prices. But in this area right here, home prices in this yellow recovery period, they were increasing. So, and then when they're in this kind of yellow area, they can go up or down. And I say recovery is one word. You could use a different word. You could use like in this kind of transitional area, or this is kind of a healthy level. But the reason why I think recovery is still a good word from it, because if we spend time and we have severe happenings in these like bust areas or this boom area where it just gets too severe, like up here, when it finally gets down, it's like it's still kind of recovering from that severe, impact on our marketplace. It's still correcting. It's in a correcting area. Okay, so it's kind of correcting back up here, and then at boom time, and now we're kind of correcting back down. Okay, so the question is, how far will it correct down? And it's going to be directly tied to what they end up doing with interest rates, right? And tied to how many people list their homes for sale. Yeah. Okay. That's going to greatly impact things, because interest rates is going to impact demand, but the homeowners here, the people that live in the valley, are going to impact supply, right? Okay, and the builders too, of course, right? How many homes they build? So, um, but the reason why I'm not predicting our prices to go crashing down like it did before, because I'm not seeing this. If I start seeing this, I'll start talking about it. But I just don't think we're going to get there, because there's a lot of things set up in a bad way for us to have this type of thing. And a lot of those things are not present currently now. Okay. It doesn't mean it's not going to get bad or worse. I feel like the market's still going to adjust downward quite a bit. So let's talk about that. Okay. All right. So this chart was all about price. Okay. So let's talk about price. Where is it going to go? And so this one is existing median. So existing means like resale homes. So I'm taking new construction out of that. New construction is kind of its own animal, and it's worth chatting more, but I don't want this video to go too long. Okay. So we're going to talk about this one on existing home price, because this is something that's a little bit more measurable, because builders can change what they build, but you can't really change what's already in the existing real estate market. Okay, so it's better watching for trends and predicting change. Okay, okay. So, but remember that early chart when I showed you the difference between January 2021, where you could get a mortgage on the median home price about 1,600 and change. Okay, and then to May of 2022, right here, when there was the peak in median home price. Okay, it was like that doubling in cost with that interest rates. Well, okay, so you can see right now, since May to September, the market's come down from 590,000. If you can't read that, it says 590 to 502 based on this chart. Okay, that's basically almost 100 grand. So in context, if you talk to your real estate agent earlier this year, this spring, and they say, gosh, I'm thinking about selling, what do you think I could get for my house? And the realtor did their homework and they came back, he's like, you probably certainly could get 600,000, near 600,000 for your house. And you're thinking, whoa, wow, that's awesome. I'm not quite ready yet, but maybe later this year I will be ready. Let's talk in the fall. And then you just call them up now and they'll be like, okay, I'm thinking about getting ready to sell. And they say, okay, yep, I think you should list right around, 500,000. And you're like, wait, I thought it was 600,000. Yep, it's 500,000 now. 100 grand difference. Significant. Okay, that's significant. And you were really fortunate if you sold around that time. Okay, the spring. Yeah, it was fortunate. And if you sold sometime, now going forward, it's gonna be different. You know, this is kind of like it's just what it is. Okay, so but how far will it continue to go down? See my little arrow. I'm like, I'm still thinking it's going to keep adjusting downward, right? Yes, I do. The fact that remember that supply one where it's kind of leveling out, that's good, right? Because that if I wasn't doing that, then I would have a different prediction than I am. But I think that the odds are really good that we're going to keep adjusting downward, and I think we're going to get closer to what we saw here um, at the beginning of this chart when we were close to about the mid 400s. Okay, it says 440,000 right here, and the next month is 450 ish. I think we're going to get down more to that level, and um, you know what? I think that's way more healthy for our market. Okay. If I don't expect it to keep falling to the point where, so basically, and how long will that take? It's sometime in 2023. It's going to keep, coming down. And then I don't know. I mean, it really depends also on a factor of how long they're going to keep interest rates high. And I'm going to provide you a link below this video, which will below the YouTube video, just in the YouTube description. Okay, there's a link there from a very trusted source that I have about interest rates, and I think it's really interesting. Who I'm following to kind of get a gauge. But the best case scenario looks like they might start easing back into the fives within 6 months. Okay, I think that's kind of the best case scenario. The worst case scenario is going to be a couple years, before they ease interest rates. And it's all how quickly these higher rates are impacting your slowing down inflation. And as soon as it's clear that it that it is to a level they're happy with, they'll start easing back interest rates. Okay, all right, but um, it's slowing demand. It's not stopping demand. Okay, so we're still going to have home sales. There's still going to be 500 plus home sell, a month, in this county. So there's still stuff that's still happening. Okay, so whether you're trying to time things, I'll talk about here more in that second. But I do feel like this is kind of where we're headed. Okay, so let's just talk about how you make better decisions based on that information. Okay, so if you're a home buyer and you're trying to figure out what to do, should I wait a little bit, let the prices drop a little further? It's pros and cons. The thing that I would do, honestly, is definitely be shopping, because there's definitely some motivated sellers out there. So your opportunity to find a good deal right now is good. But the play is that most home buyers, they get focused on price when they're getting their negotiation. Like, oh, when I can get it, maybe I can get this 10 grand cheaper, I'll be happy. A much wiser move would be, like, say, instead of asking the seller to drop it another 10 grand, you do this instead. You get them to buy down your rate for 10 grand. Okay, so a lot of these, there's these buy down programs. A lot of them are like for a 2-year buy down, which basically means, like, for a 2-year period, the seller will lower your rate for a couple years, and the chances are, after that period expires, interest rates are going to be less. You can just refinance, and then you still have a low payment. Okay, so I think that's the right move if you're a home buyer. So get out there, look, find some deals. It's a good opportunity. Do I think it's better just to wait? Not necessarily, because who knows if rates are going to be even higher, right? By the time you do something, the rate has more of an impact than the price for you in most cases if you're getting financing. Okay, so like I said, negotiate a rate buy down, refinance in a couple years. Okay, when the rates are lower. And then if you are a seller, right? If you're a homeowner, this is the part where it's not the best time for you. You had a pretty good time earlier this year. That was better, a lot better. And early summer, it was better. Now it's still possible. There's still homes being sold. I just sold one. I put a home on the market the other day, got a cash offer, sold very quickly. It happens, right? And there's still people getting financing to buy that. You might have to, negotiate some rate stuff with them, but it's happening. So if you have to sell, don't, you just don't want to. If you have to sell, though, you don't want to chase the market down. What I mean by that is, back to my example. If a realtor told you earlier this year that, or even just you thought you figured out just by looking at other people selling in your neighborhood, that you could get 600,000 for your house, and the realtor says, I think we need to be closer to 500, but you're like, no, I want to try at 550. Can we try 550 or whatever? And it's not selling, okay, at 550, because you're chasing it, right? You're not heeding the advice from your real estate agent, okay, and you're chasing it. And what's the downside of that is, by trying that and waiting, is that, okay, after a couple weeks, you drop it down closer to 500 or 515 or something like that. But you missed it, because maybe within a few weeks, it's not at 500, it's at 475, okay, or even 480, okay, so he doesn't sell. So you're just chasing it and chasing it and chasing it, and so you end up selling it from far less than you could have if you just would have dropped it to 500 to begin with, okay, because now you end up selling it for 450 in the end, when you could have sold it for 500, earning yourself additional 50 grand, okay, so you were trying to make an extra 50 grand at the beginning, but you end up losing 50 grand. Okay, so that's my point. Don't chase it. Get aggressive or creative to get it sold now, because waiting isn't necessarily better. Okay, you're going to get worse. Longer you're trying, the worse offers you're likely to get. Okay, because consider not selling also, right? Because you don't have to. most wealthy people keep their real estate for a reason. There's lots of tax incentives to have benefits from having real estate, and um, it's a protection, a hedge for your money, a tangible asset, and so and you could use your existing equity, hopefully you have in your house still, and use that to purchase, and this kind of leverage your current house so you can get your next one, and then maybe down the road sell that or whatever. Okay, so that's another thing to maybe consider. And then of course for investors. So this is really my bread and butter. I no longer practice real estate as a realtor anymore. I did that for 15 years as a broker, but now I just invest in the market, and I'm still investing in the market. I'm doing very well in this real estate market, even though this downwards. Okay, I've been doing really good. But if you're just a general investor and you're trying to decide, obviously cash it's better now, right? It's way better than it was 6 months ago. So what are you waiting for? It's good. You can get some good buys out there. And then rents are, of course, haven't dropped, so those are still strong. And you might want, because of the stock market and crypto, it's all kind of crazy, and you don't really have too much protection with those kind of investments. So get a tangible asset as a hedge against inflation, right? Just get an asset that protects you, keeps it from going down to zero, like a stock can, right? Or a coin, okay? Go down to zero, or drop suddenly overnight. Look at Bitcoin, I would just drop so much, right? So real estate doesn't you're a little bit more protected, and you can make a monthly cash flow from that property. So um, there's a reason why a lot of wealthy investors, and even like I'll put down a video of Charlie Munger, and him and Warren Buffett, they're buying a ton of apartment buildings. Okay, why? Okay, there's a reason. Okay, so anyway, um, if you have money to invest in, and you're looking for a place to put it, you should contact me because basically, I'm doing some stuff that you might really interest you. I'm getting great returns, and I have one right now that it's it's very passive income, and means like you don't have to be landlord, but you're making like 10% or more on your money each month, getting coming back in cash flow, and it's good to have multiple sources of cash flow coming in, in case you as a hedge against you lose your income stream, your job, or something else, another investment goes sideways. Um, Anyway, talk to me if you have money to invest. I mean, like, 50 grand at least, or 100 grand or something like that. Because, real estate is still not cheap. If you have something like that and you want to talk about it, see what I'm doing, reach out to me. Outside of that, you guys, good luck to you making your decisions out there. If the realtor's telling you to drop the price, probably a good idea. Make sure they're doing good marketing too, right? Check out their stuff, make sure they're doing a good job for you. But at the same time, look at the market, pay attention, don't chase it if you're trying to sell. And buyers, enjoy finally have some options to look at. Okay, take care and good luck.